Hey everyone, welcome back to Corporate Decoder. Today we're diving into the Leviev-Ease ETF Trust Report, and let me tell you, it's a bit like trying to find the prize in a cereal box. You know it's there, but you've got to sift through a lot of, well, let's just call it nutritional fiber. And the prize, it's seeing how these volatility-defined ETFs are performing. Are they hitting the mark, or are they missing the boat entirely? That's what we're uncovering. A real quick summary is that we will be talking about two funds, a Levy's Defined Volatility QQQ ETF with ticker DVQQ and Leviev-Ease Defined Volatility SB SPY ETF with ticker DVSP. If you like getting straight insights from corporate documents, subscribe. We also have a Discord community so you can chat with other people too. Scroll Semi-Annual Shareholder Report LE as of April 30, 2025. Scroll Exostart. This is a semi-annual report covering the period from December 17, 2024. So it's really just a snapshot of their first few months. These reports are designed to give shareholders an overview of how things are going. Let's talk about the costs associated with running Levy's Defined Volatility QQQ ETF. You might be asking, what does that mean for me? The fund estimates that on $10,000 investment, you will have to pay about $28. However, note that this amount reflects the expenses from when they started operating only, so in reality it would be higher if it was the whole 6-month period. In terms of annualized cost paid as a percentage, you can expect to pay 0.85% of it. Now let's zoom in on some key statistics for Leviev-Ease Defined Volatility QQQ ETF. Total net assets is $1,119. Portfolio turnover rate is 0.0%. Advisors were paid, 7,000s were paid, 7,000s were paid, 7,000s were paid, 7,000s were paid, $7,046. For comparison, imagine managing a lemonade stand. That's how much it cost that company to do the managing. How is the money allocated? The top holding is JPMorgan Chase at 43.2%. The second biggest is Invesco QQQ Trust Series 1 at 41.8%. The Leviev Defined Volatility QQQ fund is putting most of its money into exchange-traded funds, about 41.8%, with the rest in time deposits and swaps. Here's something important. There were no material fund changes during the period. And there were no changes in or disagreements with accountants during the period. This is good. It means they didn't have to change their accountants halfway though. Now let's switch over to the Leviev Defined Volatility SP ETF, the sister fund. This fund estimates that on $10,000 investment, you can expect to pay around $29. Like before, this number shows the expenses from date of commencement. So if the funds were in operation for the full 6 months, it will be higher. On term of annualized cost paid as a percentage, it's the same as the QQQ fund with about 0.85%. The Web Defined Volatility SPY ETFs is similar to the other funds. Net assets is $1,654,110 and advisors were paid $6,958. Biggest holding, Skandinaviska and Skilder Banken ABB at 56.4%. Second biggest holding, SPDR S&P 500 ETF Trust at 39.6%. Like the other funds, Leviev-Ease Defined Volatility SPY allocates its money the same way, with 39.6% into exchange-traded funds and rest in deposits and swaps. Again, like before, there were no material fund changes during the period or any disagreements with the accountants. To get more technical, let's dive into the schedule of investments for the Leviev-Ease Defined Volatility QQQ ETF. Here we find 434 shares of Invesco QQQ Trust Series 1, valued at $681,824. It is about 41.8% of the fund. This makes sense since the fund claims to be copying another fund. There are also time deposits. There are 2 JPMorgan Chase and Skandinaviska and Skilder Banken. The total time deposits about 77.5% or $1,265,000. Scroll on under positions, it is important to note with the one tag that a portion of collateral for derivatives outstanding have been segregated. Let's take a closer look at the combined statements of assets and liabilities for each fund, which gives some more insights into the state of the fund. For the Volatility QQQ fund, its investments are valued at $1,946,000 $1824, and the Volatility SP fund is at $1,962,449. The liabilities are pretty much the same, so at the end of the period, NA assets are about 1.6 million for both funds. However, note that at cost the investments were higher, resulting in losses are below 1.6 million for both funds. However, note that at cost the investments were higher, resulting in losses. Net increase or decrease from operation for each fund is negative. This again is due to the fund starting operating mid-period. However, both funds had more money coming in as proceeds from shares issued that covered the losses from operating. The financial highlight section shows that for both funds there was a net loss from operation. However, both funds are very similar in expenses and operations. It is also really hard to gauge with the funds being new. The fund is organized as a Delaware trust and registered under the Investment Company Act of 1940. Willie's Investment acts as the advisor. Like most of these funds, the funds aim to be labeled a regulated investment company to avoid additional tax burdens. There are a variety of risks with investing in it. The risks range from active market risk, for example. There may not even be an active buying and selling market. To authorized participant concentration risk. There aren't enough companies participating in it. Cash position risk that it might lose money and not have US Gov help. Concentration risk that investment in single asset or sector might not fare well, to cybersecurity risk for digital attacks. And much more. ACI ultimately, all investments carry risk C. Now, what are my thoughts based on these documents? These funds are definitely a niche product. The idea is to offer some protection against market downturns using defined volatility methods. The downside, that approach might limit gains when the market's going up. Also, it is definitely hard to judge the financial health and direction with such little data and history. There is definitely a lot of risk factors related to the funds, as it's very dependent if the target index methodology is any good. Alright, that's our breakdown of LevEase ETF Trust's latest filing, but what's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord in the description. Thanks for watching, see you next time.